Hello and welcome. You're tuned into Ask Profit on NDTV Profit. I'm Smriti Chaudhary and with me is Mathew. And for the next 30 minutes, we'll take all your stock-related queries. So write to us on any of our social media channels or on the WhatsApp number that's flashing on your screen. Write to us on any of the YouTube live chat, as well, and we'll take your questions from there. But before we do that, let's take a quick check of the markets. You have the Nifty 50 that's off the low point of the day, trading just above 22,500 levels, and you look at the broader markets as well, broader markets in the red, so benchmarks outperforming the broader markets today. Nifty mid-cap down about 0.2%, small cap index pretty much flattish but with a negative bias. Let's look at some of the contributors of the Nifty 50 and see what's pulling the index higher. You have the likes of L&T, Mahindra & Mahindra and ITC that are contributing to it's only about 30 points higher right now, and out of that L&T is contributing half of that. On the other end, you have Bharti Airtel, Kotak Mahindra, SBI, TCS all dragging in trade. Let's look at the sectors as well and see what's the picture there. You have the Nifty Media and Nifty Healthcare Index that's down over 1% in trade. There's Nifty Pharma also down about 1% in trade. However, Realty doing well, up over 1.5%. Nifty Consumer Durables up about 0.8% as well. Bit of a 50-50 picture in terms of sectors. Let's look at some of the stocks that are moving as well. You have something like a Bikaji Foods that's moving again today very positively. If we can pull that up, yes, up about 8% in trade. This is post the result, and it posted. It's been a while since it posted those good numbers, but still on an uptrend. You have Praj Industries also moving after the fourth quarter results, up over 6.5%, decent set of numbers. While revenue fell on a quarter-on-quarter basis, there was expansion in the margins and the profit also rose. On the other hand, you have Welspun that's down on the back of weak numbers. Then let's look at some. Okay, let's come to the focus for today, which is Cummins India. And to talk about those numbers, now the numbers came a day before, but we have brokerages that have come out with their notes. While the numbers looked weak, brokerages continue to remain positive. And to kind of talk about that, I'm joined by my colleague Puneet. Puneet, take it away.
Yeah, thanks for that. So one of the key things was the exports, which are down by roughly 18% for the full fiscal year and 25% for the quarter four. But apart from that, the management has said that they've been able to recoup some of the growth because of the strong domestic demand, upwards of roughly 25% for this particular quarter. Brokerages will also maintain the positive view, with Citi having a buy call with a target price of roughly 4,384 rupees per share. This is a 22% upside from the current levels. And they have said that, this has been raised from roughly 3,500 rupees, which the brokerage had previously. Now, one of the key things that they have said that domestic demand as well as margin expansion for the company has been the key positives. While they have said that data centers, which is an up-and-coming segment, which started a couple of years ago, just roughly 1% of power gen revenues at that time, this has increased to 10% now. And going forward as well, the company is expecting to double this business over the next 5 years. Another key thing that we look at for all MNCs is the royalty picture. Currently, it's down to just 1.7% for Cummins. This is down from roughly 3% previously. And the positive thing is that the management has highlighted that it will be at the similar level for the next fiscal year as well. When you look at, they have guided for double-digit growth for the next few years, and they have said that the company is expected to grow double of what India's GDP will be, so expecting a growth of roughly between 12 to 16% over the medium term. Now, another thing that they have said that the city has upped their estimates for EPS by 17 and 24% over the next 2 years and are building in higher revenue as well as margin expansion. When you look at what Motilal is saying, they also have a buy call with a target price of 4,100 rupees, which is a 14% upside from current levels. They see that there are three key positives for the company. One is the long-term demand trend drivers for its power gen, which is a major segment. The second one is the new emission norms and the readiness of what the company is. They come in on the 1st of July, and the ability to sustain margins as well. So overall, really strong picture coming in from both these brokerages. Others have also upgraded their target price, such as Nomura, but they are neutral because of the strong valuation of roughly 51 times for FY26. But overall, a really strong show from Cummins in this particular quarter. Back to you.
All right. Thanks so much, Puneet, for getting us those details. Let me, on that note, introduce Ashish Kapoor as well as Rajat Bose. They're the guests today that will help you get answers to all of your stock-related questions. Thank you so much, gentlemen, for taking the time. Ashish, I'll come to you first. Cummins India, despite what some might have said were a decent set of numbers in the fourth quarter, the stock took a bit of a battering in trade yesterday, and it is down in trade today as well. What did you make of the numbers, and what should investors do? Should they buy at this point?
Yeah, I think they should be buying at this point. In fact, the results are, you're right, pretty good on all fronts. Their revenue has gone up and profits have gone up substantially. More than that, I think continuously over the last few quarters, their return ratios are improving, showing very good, utilization of capital and very good business prospects. Their cash in their books is continuously increasing. So very robust position the company is in. And like I slightly pointed out, an MNC, when it may look expensive, but compared to other companies in the same sector, is actually cheaper, putting at a cheaper valuation, despite such stellar numbers. So according to me, it looks very good, very well poised. And I think another 20-25% upside from here can easily be factored in the next 6 to 12 months. So looks very good as an investment idea on the way down. So I would recommend investors to accumulate this stock.
Wow, 20 to 25% upside in stock price. But let's start off with the queries now. And the first one is from Monica Sharma, who's talking about Delta Corp that they bought at a price of 151. Elevated levels. Rajat, the stock has been in a downtrend. It's a loss-making stock, down about 53% in the last 1 year. Any chance of any kind of upside for a viewer who's holding it at these elevated levels?
Smriti, first of all, good morning and thank you for having me on your show. What I would like to say here is that there is no redeeming feature from a technical point of view. It is pretty low. It is posting new lows. 113.40 is the current price. It can go further down. Even on the oscillator charts, there are no signs of any positive divergence, which would indicate that there is some possibility that it could actually give a bounce back or at least cross 120. I see no such redeeming features. I would say it is better to exit this stock because even with so much of bullishness in the recent past, this stock has been continuously showing weakness. So it's better to get out of it and invest somewhere else.
Okay, fair point. I will come back to you at some point to ask what that somewhere else is. Puneet Saxena has got the next question though, Rajat, and this one's also for you. Happy Forgings is the name of the counter. He's bought at levels of 1,000 and he's asking what his strategy should be for the next 3 to 6 months and whether or not you can provide him with a target price. The stock, and I'm looking at the performance in 2024, it's not done too much, 6.5% or thereabouts, but then from its low point that it made on the 18th of March, it has made a pretty smart move up. Would you say that holding on makes sense?
It is Happy Forging, right?
That's right, Happy Forging.
Yeah. Happy Forging on it is on an up move, and currently after posting a high 4 days back, 3 days back, excluding today, it was 1140 high. After that, there is some kind of a correction. If it were to fall below say 1080, I think in that case there will be some problem in the sense that this is a vertical run, almost a vertical run, and it can be corrected. In case of any correction, what kind of levels to look for? It will be 1000 to about 1020. Around that level, one can buy again. Or if somebody is taking a short-term position in this, I would suggest booking profits.
All right. The next question is from Satya. And this is for you, Ashish. They say they sold Motherson Sumi and switched to Motherson Sumi wiring based on a fundamental analyst suggestion. But now, since they have made the switch, the wiring has given negative returns, and Motherson International has been positive. It has actually risen about 16% in the last 1 month itself. The question here is, first of all, what happened? Why this sort of negative returns in Motherson Sumi wiring? And should you add more at 66 levels? It's currently trading about that price.
Well, firstly, I think it wasn't a very sound advice because Samvardhana, that company, is actually a very coming out as a very big conglomerate, and I don't know why somebody would have advised the investor to shift into Motherson wiring. But having done that, I think even the wiring business is this company also is very good. So I would think that it's just a matter of time. I don't know. I don't exactly. I haven't tracked the company lately, so I don't know why it has fallen. But I think now that having done that, should hold on. Should be holding on patiently, and I think even wiring would do well in time to come, and I think would recover their loss for sure and make some profit also. So stay invested, but Samvardhana, of course, is a much better company and I think much better prospects.
In terms of the sheer size of the portfolio of products that they offer in the auto anch space, right? Wiring harnesses is what, of course, Motherson Wiring does, but then Samvardhana Motherson offers a whole suite of products to several clients, not just in India. It's a point well taken, Ashish. I'm coming back to you on IT stocks, and this is a question from Shri. He's asking about the likes of TCS, Wipro, Cyient and Infosys. So mostly he's talking about the large cap IT stocks, and I know that a lot of people have been talking about the prospects of mid cap IT. So would you say that this is a good time to perhaps look at the large cap stocks?
Yeah, I think so. I think, see, they are falling basically because of US problems. Now, US remains the biggest market, but you really can't correlate like that because whatever problems US tech companies may be having, the fact is that the demand for outsourcing of software and other technology is going to keep increasing because the whole world is now focused on technology, new internet solutions and other things. So I think the demand for Indian-based products, Indian-based services is going to keep improving going forward. So what this is representing, according to me, is a good opportunity to enter. So if you enter into TCS, Infosys, and the other established names, you are actually getting a good entry point because whatever might be happening in US is firstly temporary, and secondly, regardless of which one company, and I think that also it's a market dynamics at play because Salesforce itself has done very well. Just one miss in, I think, for 16 years. So that's really not something to go by. I think more to do with market dynamics and otherwise nervousness in the US markets. So I think this does not reflect on the growth of technology as such. So I think this fall represents going to be a very good opportunity to enter into established IT players in India, both large as well as mid caps.
All right, we'll slip into a short break right now, but we'll be back and we'll take more queries on the other side. Stay tuned.
Welcome back. You're watching Ask Profit, and choppiness continues in the Indian equity markets. We may have started the hour, or rather the half-hour show, with the Nifty gaining about 0.1%, but we're back at 1/3% or thereabouts, and off the low point of the day, but still off the high point and gains of about 0.7%. The next question we're taking is on Paisalo Digital, and this is a question coming in from Shiv Kumar. He's asking about a counter that he's already bought. He's bought at levels of 4,000. He's bought at levels of he's bought 4,000 shares at levels of 67. He's asking whether to hold, accumulate, or sell. Rajat, what's your view on the charts?
Well, Alex, I would say that if you could show the 1-year chart on your screen, that would be great, because this is this stock discussion on this stock would be instructive for what can happen in a lot of other stocks. This particular stock moved up this year. Early this year, it posted a high of about 100, and after that, it was between February and March, and after that, early March, it failed to something like 50 rupees or very close to that. After that, again, it posted a lower high around, say, 85, and then tasted a low around 60. Now it is languishing. It is just about getting ready to fall below 55, which is its 200-day exponential moving average. Any stock that goes up parabolically, that meets with this kind of a situation going forward, because the time and price must adjust. If price shoots up too much and time has not elapsed that much, then this kind of a situation happens. And that can happen in a lot of mid-cap, even in some large-cap stocks going forward. That is what I envisage. And one should get out of this if it were to fall below 55. So Paisalo Digital, not a buying situation there. At least technically, it doesn't warrant a buy.
All right, fair point. The next question is from Suresh Babu, who's writing in from Hyderabad. They're talking about the counter Natco. Ashish, very interestingly, Suresh has been holding on to this counter since IPO, and from what I can see, that's over 2 decades since they've been holding a counter like Natco. And while it is down in trade today after the fourth quarter numbers, we did see a jump of about 6-7% in the counter. However, the question here is that Suresh thinks that the performance is not reflected in the price as such in the last 2 quarters specifically. So what's the fundamental view on this from a longer term perspective? Time to book profits, considering you've been holding on to this counter from the last 2 decades?
Well, I don't think so. I think firstly, he must have made a lot of money, because this stock has done very well over the last 2 decades. I don't remember the timing exactly, but at some point of time, by matter of, I think, 5-6 years, it kind of went up, multiplied its value. But so therefore, from anybody holding from the IPO level would have made a lot of money. Having said that, certainly hold on, because see, maybe the share performance is not as per his expectation, but the company has been doing fairly well. And also, pharma generally was a bit out of favor as far as the sector goes in this market so far. The momentum in pharma shares is coming back. So I think at some point of time, Natco the share performance should also start catching up. Either way, he's a long-term investor. I think company is doing very well. He's made very good profits on it. So I don't see, unless he needs money, I don't see any reason why he should be looking to exit.
Fair point. All right, the next question is from Vinod. He's writing from Chennai, and he's asking about Canara Bank, and he's asking whether this is the right entry point. He's got a long-term view. He's asking whether this is a fundamentally good counter, but he's specifically asking me to ask you this question, Rajat, and I know that you look at the technicals. So can you tell us whether this is a good point to buy?
Well, I would wait for a correction, because there can be a correction up to 100 rupees. But since Vinod is actually planning to buy the stock for longer term, I assume that he would like to stay there for about 5 years or so. That is my definition of long term. If that is the case, then buy some here and also buy on a dip. But definitely, this is a stock that is maintaining its uptrend. The long-term trend is up, the medium-term trend is up, and short-term trend is sideways. So buy some here and buy up to 100 and continue to hold. This has got good prospects.
All right, coming back to you, Rajat, this is from Geeta, who's talking about the counter Indian hotels. The question here is that should you maybe accumulate the stock? And from what I can see, the stock seems to be in a bit of a correction mode. So good time to add more.
Well, if one is a long-term investor, one can start adding it. Similarly, just like the earlier stock, now Indian hotel is at 548. And its 200-day exponential moving average is close to about 500. To be precise, it is at 497. So this fall, there is likely to be some further fall, and it may come down to something like 500. Around that time, you buy big quantity, and its long-term trend is up, but the medium-term trend is sideways, and the short-term trend is down. So chances are you are going to get it at a lower price also. But if you are accumulating, then buy some here and buy more on the downside up to 500.
Okay, I'm getting a lot of questions on the technicals, but I am actually curious about DMart, which my viewer Samir is asking about. And generally he's looking at the long-term prospects. So I will come to you, Ashish, on this one. I'm not certain as to when he has bought this, but he's concerned about the recent price trend, which has been negative. Should he hold on based on the fundamentals?
Well, I think he must have bought on the basis of this company having a very robust retail model. It was always very expensive. That was always a point of discussion right from the IPO time. It was always thought to be very expensive and ahead of its time in terms of valuation. Nothing has changed. I think still it has a very good model, and I think as far as the supermarket goes, I think it still has a very, very good model, very robust model, and wherever they are operating, they are very clearly in a leadership position. So nothing has changed. It's just that I think the excitement after the IPO, the stock really went up, was at an astronomical valuation. So needed some kind of cooling off, some kind of a larger period of consolidation, which I think it is going through. So as long as, time is not a constraint, I think nothing has changed. All the assumptions regarding their growth are still there. A stock has a long way to go, but of course, like every great company, reaches kind of a roadblock. It has reached a roadblock. Difficult to time it now when it will come out of it. But stay invested. I think your initial, I'm sure you bought it with this assumption of taking part in the India's retail growth story. That it captures very well, and I think in a period of time before it starts moving up again. This thing would be to hold on.
All right. The next counter is Suzlon. This one's from Snigdha, who's writing in from Delhi. They bought the counter at a price of 48 rupees, which is slightly higher than where it's currently trading at. Rajat, this is from a 6-month perspective. Do you see what kind of upside do you see in the stock? And from what I can see in the last 1 year, this stock has been a turnaround story with over 200% returns.
You're right. It has gone up very steeply since July 2023. And early part of 2024, it posted a high. This time, that time the high was 50.60. And this time, very close, recently, the high is around 49. So somewhat similar. What I would say is this, that if you are buying at this juncture, then that's a complete mistake from a trading point of view, because this is likely to come down. This is actually a failure swing that has happened. Now it is trading at 45. That means it attempted that time twice, and this time also 2 successive sessions. It is trying to get past that 50 mark, and it has not been able to do so. If it were to fall below 36, then there would be a sharp downswing. So I would suggest not getting into right now. And if one has already purchased and one is sitting on a good cash, book that profit.
All right. Do we have time for one quick question? All right. Beena from Mumbai is asking REC. She's bought at levels of 129, 1,000 shares. A very quick view, Ashish, should she continue to hold?
Yeah, certainly continue to hold. I think it is a long way to go. One of the great performing stocks should continue to do so.
All right. That brings us to the end of this particular edition of Ask Profit. Ashish as well as Rajat, thank you so much for joining in and for answering all the questions you did. Viewers, we're completely out of time on this particular edition. If we didn't answer your question, hopefully the other answers that were discussed on the show have benefited you. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.
Hello and welcome. This is Hot Money. I'm Agam Vakil. We are taking a look at the markets which at the moment are advancing, but it's been a quiet trading day. On the whole, if you consider the start of the trading session and then moving on, it's been largely flattish. We haven't seen as much traction. It's been a day of consolidation to speak of. Perhaps a little bit of short covering coming through in the earlier bit of the session, and now we are seeing about steadiness, and I reckon it's going to be quiet here on. Unless, of course, we expect some fireworks in the last 1 hour trade. Well, we can't rule that out. But right now, at the moment, the silence continues, at least as far as today's day of trade is concerned. Consider it a calm before the storm that we could expect going into trade on Monday, then where we will have markets react to exit polls, and Tuesday, where we will in fact have the outcome of the general elections. That said, as far as markets go right now, at the moment, the Nifty is advancing. It's a bank Nifty which is once again taking a step back, even though that is also trending marginally in the green right now. As far as your constituents of the Nifty are concerned, let's pull that up and let's see which of these stocks are actually providing the impetus. So we do have ICICI Bank and L&T providing perhaps a little bit of support as far as the Nifty is concerned. On the lower end of what's weighing down on the indices is Bharti Airtel, Kotak Mahindra Bank, and TCS. But a very flat day of trade, and at least as far as the Nifty is concerned, now up just about 35, 40 odd points, so not much to speak for there. If you consider the broader markets and see how things are faring there as well, let's pull that out. Is the mid-cap index is flat right now, and as far as the small-cap index is concerned, there as well we have seen marginal gains. Again, a very quiet day for the broader markets too. At this point in time, a lot of participants will be hesitant hesitant to carry substantially large positions over the course of the next two trading sessions because of the fact that we are looking at a lot of volatility. That said, well, let's keep an eye on some of these factors. But on that note, let's also try and figure out where we have actually seen gains and where we're actually looking at some amount of weakness, at least as far as the mid-cap space is concerned, because that's something that we will keep in mind, that's something that we will bear in mind at the moment. If you consider the mid-cap 100 and, the index specifically out there, we have some weakness in something like an Ipca Labs that's down around 5.8%. Besides Ipca Lab, we have Page Industries, which is also declining by around 3.7%, and APL Apollo, that's down around 3.5%. On the gaining end, however, there is traction, positive traction when it comes to GMR Airports, that advances by 4.4%, along with PB Fintech, up as much as 3.8%, and Torrent Power up 3.8% as well. So we have seen some gains. Prestige Estates, of course, which also reacts to earnings, that's where we've seen some positive traction. So that's as far as your overall scheme of things go when it comes to the broader markets. On that note, let's take a look at all the stocks that we are going to address in the show today. We start off with Adani Group, Bharat Dynamics coming up with its earnings, MSCI